Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. Today, I am happy to be welcomed by Andrew Nelson. Andrew, thank you so much for joining us.
Anna, thank you very much for having me. I'm excited to be here.
So, Andrew, you are with GNA Financial Advisors, and I also want to point out before we get into who you are and what you do, we have been following you for a while. We featured you amongst other stars in our New Faces of Mining public entrepreneur magazine that we did last year around PDAC. So it's nice to see that you're still around. It's nice to see some young faces in the sector. I think both you and I in our previous discussions have talked about how passionate we both are about the mining sector. So again, thank you so much for joining me today. There's so much going on globally right now in the economy and in the markets, and definitely want to have this discussion around how this is affecting the mining sector. Why don't you start off by telling us about yourself and GNA Financial Advisors?
Sure, absolutely. So GNA was launched about a year ago by myself, and I'm currently working with my business partner, Colin Moore. My background, I'm a chartered professional accountant by trade and mining investment banker. And my partner, Colin Moore, was formerly trained as a mining engineer who transitioned into being an investment professional, working at BMO Capital Markets as an investment banker, and later on managing $2 billion at Waterton and then Pacific Road Capital here in Vancouver. So GNA has three main areas that we focus on exclusively 100% in the junior mining space, and that's capital markets advisory, social media services, and we also have an accounting firm. But the real bread and butter are the capital markets services, where we act in-house as corporate finance consultants for junior mining companies, as a lot of these little companies don't have those types of professionals in-house. And really from kind of my vantage point, there is kind of a lack of young professionals in this field in Vancouver. So capital markets is a real key component for us. But what's interesting is we recently launched our social media offering, and really the timing couldn't have been any better, with companies basically going on 100% online right now due to the coronavirus.
I think you made a really good point there, because I used to work with junior public companies and mainly in the mining sector as well. And I think the one thing I really discovered, because at the time I was providing advisory services as well in a myriad of corporate governance ways, was that the smaller public companies, they don't have in-house IR, they don't have in-house social media, they don't have in-house even legal counsel most often of the time. And so I think it's these advisory groups that really are kind of making the world go round, especially in the small cap space. So happy that we have people like yourselves. Could you maybe dive in a little bit further? You talked about kind of your advisory services to junior public companies. What does that look like?
Yeah, absolutely. No, that's a good question. So on the capital markets front, since my partner and I were formerly investment bankers, we help companies do valuations. So if a company wants to buy or sell an asset, whether it's land, a mine, a deposit, we can help with valuations. Then there's corporate development and strategy. We can act as kind of a liaison for investor relations, talking to shareholders, alleviating some of that stress from the CEO and freeing up their time. Capital raising for select companies where we believe there's a really strong value proposition that we're willing to put our own money into and invest alongside with investors into clients, and also kind of macro analysis on commodity markets and mining trends. Another big thing we help with is, as former investment bankers, all we did day and night was create pitch books. And pitch books are kind of the lifeblood of companies when it comes to raising capital. It's a really crucial marketing tool for companies. And first,
you mean slide deck? Like, as people talk about decks all the time. Is that what you mean?
Yeah, absolutely. Yeah, the corporate presentation, which is formally their formal name, pitch books or slide decks, which are sometimes they're called. And so, that's a really important tool for the CEO of any of these companies, because that's the first thing investors are going to be looking at. And most of the time, that's what they're going to base their investment decision on. And so we really strive to help companies communicate their value proposition, because that's what it is at the end of the day, to really make a strong case for your company. On the social media front, we're now helping companies create content. So as mining-focused professionals, we really understand the business and we can speak the language and we understand what investors are looking for. And then on top of that, we'll help companies manage their accounts, whether they're on Twitter, LinkedIn, YouTube, or Instagram. and also with search engine optimization, so that when investors are searching for gold company X, maybe this company is missing some keywords from their website. And then to help expand the reach, if a company is creating a new kind of platform, help them do targeted advertisements, targeting ads where their investors are based, whether it's in Canada, the US, Germany, the UK, over YouTube, LinkedIn, and Instagram, and just general social media strategy. And even on our own channels at GNA, we've created educational content for new and younger investors who might not be familiar with the markets for mining, because sometimes it can be a very opaque market and can be difficult to understand the lingo and jargon that's talked about in the mining space. So a big focus at GNA is educating younger investors and millennials through simple to easy understand video tutorials that are free and online on our YouTube channel at GNA Financial.
Well, I love that you brought that up, and I do have to say, I want to add to that a little bit, that it's not just young and millennial investors. I think there's also a lot of new investors in general coming to the space of any age, and the mining sector of all sectors is perhaps the hardest sector to digest information, or to understand the information that we have been given access to. We're in a period of time now where people have the ability to open an online discount brokerage account and purchase and sell whatever they want, at a very low cost. And without that advice, that professional advice that typically you would be getting, especially in the mining sector, I think creating content, that is digestible for a new investor, no matter what age, is incredibly important for the mining sector. I know back in the day, the mining sector, typically they were known for their websites that probably hadn't been updated in 10 years, and they had just a new press release every few months that has some drill results. And for a period of time that did work, but I think the social media element, and providing digestible content is incredibly important right now. A colleague of mine recently said, we have to redefine how we tell the story in the mining sector, which is what people like yourselves are doing. From a new investor standpoint, what should I get out of a deck? What should I get out of a pitch book? What information should a company be telling me that will help me make that decision?
That's a really good question. So I think kind of the three attributes any company should be striving to communicate is the team, the asset, and capital structure, and within capital structure, the money that they have, the cash in the bank. So you want to be highlighting, your team. Have you done it before? What's your track record? Are you well known in the capital markets market? And on the asset side, where is your asset? Geographically located. What commodity are you going after? If you're an explorer, what's the exploration upside? Have you done historical or previous drilling before and intercepted mineralization? Is your company going to be, obviously every company wants to have an increasing share price, but what are the catalysts? What's going to get investors excited about your stock? If you're a new investor, what's going to incentivize them to purchase your stock? And investors should be, made aware, what is insider management ownership? How much skin in the game do management have, and how much capital have they actually put into the company? Another big thing is capital structure. Everybody, should be aware that a tight capital structure can cause rapid share price appreciation. And the lifeblood of these companies is typically through issuing equity, so through more shares issued. But you don't want to have a blown out share structure where you have hundreds of millions of shares outstanding, because you don't know where your shareholder base is and you don't know who owns your stock. So those kind of three main attributes, I think every company should be communicating: the team, the asset, your capital structure, and also ability to raise capital, because that's critically important.
I've had the opportunity to spend lots of time with people such as yourself, who spend your days evaluating companies, involved with companies, helping them build out their structure, helping them raise capital and move forward. And it really is, it seems simple, but it really is the cornerstone of it. The people running the project, what have they done in the past? And everything is public and fully disclosed. So if they've done a project in the past, you can go and look at, how they executed that project. All that information is available. Like you said, the asset, that's where maybe a bit more technical information is helpful. So dealing with a professional and dealing with people who, kind of know the commodity side, as well as jurisdictional. And then the capital structure. I mean, that's a big one. You talk about kind of blown out distribution. But the other thing is, if they've done a bunch of raises, and I think this is one thing people might not fully understand about, especially the exploration space, is that there is no revenues in those companies. So when you look at the financials, you're not looking at a revenue. It's all about raising capital to go and create a drill program and hopefully get some good results. And I think, with those, every time they go and raise money, they're redefining what the capital structure looks like. Take a look at how they spent the money the last time they raised capital. How are they using their use of proceeds in past raises? And I think that's something new investors need to wrap their head around, is this information is all available to you. Typically it's better if you can use a professional because they know where to source it out and look for it. But it's good to note that, if you're looking at something from a company that doesn't provide you those three cornerstone parts of your program, then you're missing some key information to know if there's value in it. What do you see as an opportunity to gain, millennial or new investor traction? How from our side of things as issuers and exchanges, how do we gain their attention in the mining sector? That's a good question.
So just taking it a step back, just, looking at what has happened here in Vancouver over the past several years. At the start of 2016, it was the start of an epic real estate boom here in Vancouver, and everybody, millennials, my friends, the cab drivers, everybody was talking about real estate, and everybody was rushing out to the banks to get mortgages because they all saw dollar signs in their eyes. They all had the greed factor. They wanted to cash in on this big boom. And then I believe in 2017, 2018, we entered the cannabis boom.
Oh yeah, I had a lot of taxi drivers talk to me about cannabis.
Everybody was talking about it. And then there's the crypto craze. So what all those three kind of markets had in common was that share prices were rapidly appreciating and everybody had dollar signs in their eyes and everybody wanted to make a quick buck. So translating that into mining, I think at a high level, what's going to get millennials interested in mining is really an epic bull market, which I believe we're in right now for precious metals, and having rising share prices that can't be ignored by younger investors, because that's why we all invest, right, is to make a return and generate some profits. But the second part, which I believe is really key, is reaching those millennial investors. And currently, some companies are doing this well and some aren't. But we know millennials are spending their time on social media platforms like Instagram, LinkedIn, YouTube, and Twitter. Personally, myself, if I want a quick overview on a company and to see who the CEO is, I'll just go on YouTube and watch a 5-10 minute clip of them. But then, of course, review their corporate presentation, financial statements, and much more after that. But YouTube is a great platform to just, listen to the CEO, see who they are, are they sophisticated, and just get a high level overview of the company. And at first glance, a lot of new investors and millennial investors are trying to manage their own money, like you mentioned, trying to do it themselves, and they're trying to seek out investment advice online for free, which definitely has its pros and cons, which I can talk about later. But I think it's a two-step approach to getting millennials interested. Companies need good share price performance because we're all investors at the end of the day, but the companies also need to be utilizing social media to reach those new investors and millennial investors.
Absolutely. It's a way to communicate. I mean, the pandemic that we're currently under, as we sit here having this conversation, in April 2020, I think it might be forcing the hand of some people who haven't taken that next step as a public company to really force themselves out there. Speaking to that side of things as an investor, what are ways to create value in the junior mining space? Where can we seek value and upside?
So that's one of the big things I took away from my time at Dundee Securities as an investment banker, that I really understood the best ways to create value in junior mining are either through timing a commodity cycle or being a part of a big discovery, or if you do those two together, that can be magical and life-changing. I'll give you a few examples just so your viewers are aware of kind of the opportunities that we're looking at and that we evaluate on a daily basis. So Great Bear Resources, it's a great gold story. Their key asset is the Dixie Project in Red Lake, Ontario. And I believe a few years ago, they were trading for about 50 cents per share pre-discovery. I was just checking in on them today, and I think they hit around $9 per share. So that's about an 1,800% return, an 18-bagger since the discovery. They're a $100 million market cap company. Another big thing they did that investors should be aware of is they did a $17 million bought deal late last year in November. And second example, on the silver side that investors should be aware of kind of the value creation is Silvercrest Metals. They have their Las Chispas high-grade silver project in Sonora, Mexico. And when that company went public, you could have bought those shares for about 15, 20 cents per share. And I was looking at them today, they were trading around $9.30 per share, which is like a 7,000% return.
I love the stories. They're great fishing stories, right?
Yeah, like I'm not saying investors are going to get those kind of returns because nobody really holds the stock from the very beginning to the end.
Yeah.
But it just shows that timing a commodity cycle, we're in a great gold and silver environment right now, coupled with a brand new discovery like Great Bear and Silvercrest have made, the returns can be literally life-changing and phenomenal. But, tying that back to what I was talking about before, what those two companies have in common is they have a great team, a great asset, and a great share structure, and great access to capital. So those are kind of some of the spectacular returns, of course, mining investments can offer. Those are high reward opportunities, but I will point out there are many risks in mining that investors should be aware of as well.
Absolutely. Listen, I want to talk about the risk because I think that's really important. I mean, it is a very speculative sector. But before we do that, I always like to pretend that people don't know everything about what we do for a living. Can you tell our listeners what a bought deal is?
Sure. Yeah, no, that's a good question. So a bought deal, I should also point out that Silvercrest actually just closed another bought deal, $100 million led by Canaccord. So a bought deal is when the brokerage house likes the financing the company is doing so much that the brokerage house buys the whole deal themselves. And then it's up to the capital markets team there, the retail brokers, the investment bankers, to sell that stock to their clients. But the difference between a bought deal and a best efforts deal is that the brokerage says, hey, we'll try our best to sell this financing. We're not going to guarantee it. But a bought deal is such a bullish indicator that this brokerage or brokerage houses are so optimistic on the company that they just grab the whole deal themselves, which
I was gonna say that would be such a win for an issuer, right?
Absolutely. That's just instant capital in their pockets.
Yeah, that's fantastic. Okay, let's talk about the risks. There's a few.
Mining has a few risks. We'll definitely say that, and that's a great topic to talk on because over the years, I've definitely learned to understand and appreciate the risks. And literally, as you know, there's so many things that can go wrong with exploration, development, and even producing companies. For starters, there's commodity price risk. So talking about those cycles, every mining company, whether you're a producer, a developer, or explorer, every company is a price taker. So you're really at the mercy of the commodity price. So that's why timing is so key. And it's a great time to be in precious metals. Base metals, copper, lead, zinc right now, they're great long-term fundamentals, but I think there's some headwinds coming for base metals right now. Talking about other risks, there's on the lower spectrum in the junior mining space, there's discovery and exploration risk. So, these companies, they have a great geological thesis. Really, entrepreneurs, their vision is in the ground, where tech entrepreneurs, they have this great vision in the head. So geologists are relying on their interpretation of what might be in the ground and what they potentially might discover. So that's why it's so critical to invest and back teams that have done it before in countries where they're familiar, they know the rocks, and they have experience. So, and then another key risk on top of that is financing risk. So we were talking about access to capital. Does the company have the ability to raise money? Because like you pointed out, if you're not a producer, these are non-revenue generating companies, and they solely rely on issuing equity to bring cash into the company so they can perform their essential services and fundamental tasks of spending money. These companies are literally in the business of spending money to make a discovery. So if they can't finance and raise capital, there's going to be no news flow. There's going to be no catalysts. Investors are just going to, jump off the ship, right? And on top of that, there's social risks. So if a producing company or even a developer or explorer is kind of in an exotic jurisdiction, or even in Canada now, you have to be talking with the communities and letting them know what you're doing and what your plans are, and what's in it for the communities. How are the communities going to be benefiting from the companies working there? So social risk is a big thing. If the community doesn't want you there, they're going to blockade or stop the producing company from accessing the mine, or they're going to run the exploration company out of town. So those are some of the high level kind of key risks: commodity price risk, exploration risk, management risks, social risks, financing risks. The list goes on and on, though, as you know. There's
a few, Andrew, just a few. Well, and here's the thing: is it's so funny. It's when you see those commercials for pharmaceuticals and they give you the list of potential side effects. I feel like we just went through that exercise. But listen, I think there is so many fantastic opportunities, right? And like you said, you just need to be conscientious of the risk. For example, in northern BC or in northern Canada, there's only so many months a year you could even go up there to run a drill program.
That too, yeah.
If you're in another country, there's currency risk. We have our Native community in Canada, and we work very hard with our Indigenous groups to try and work with them on what is deemed their property and when we're on there. But do we know what those Indigenous groups are in other countries, and how they feel about exploration and mining? So you're right, there is a ton of risks. I think when there's a great opportunity, it's pretty amazing. And that kind of leads into, I guess, my next question is...
Before we get on to the next question, I just want to wrap up that thought and talk about how investors can mitigate those risks. So, a simple thing investors can be doing are literally just investing with the best names in the business, like the Ross Beatties of the world, the Robert Friedlands, the Lucas Lundins. These guys have done it before. They've literally created billions and billions of dollars in shareholder value. They know what a good project is, right? And they surround themselves with the smartest people in the business. So they have incredible teams. They have access to capital, and they just have this spider sense on commodity cycles. They just know when the right time is to buy. So investing with the best is one of the best things you can do. Also, seeking out professional advice from investment advisors. Like here in Vancouver, we have groups at, like Haywood Securities. I think 70 or 80% of their business is in the junior mining space. So these guys have evaluated hundreds and hundreds, if not thousands, of potential investment opportunities for their clients. So using a broker to help manage your money and guide you through this maze of risks is something I would highly recommend if you're new to the mining space. Another thing investors can do is seek out a sophisticated newsletter like Exploration Insights with Joe Mazumdar and Brent Cook. Those guys,
he's great.
Business for so long. They know what to look for as well. Another one that comes to mind is the Resource Insider, run by Jamie Keach. He's a mining engineer, and he's helped investors. I've been following his kind of track record. He's evaluated some great deals and has some good wins so far for investors. So using a broker, helping you guide you through kind of the maze of the junior mining world, or subscribing to a premium newsletter are some great ways to kind of mitigate those investment risks and pitfalls.
Those are really, really valuable points. And I hope that anyone listening to this, if you listen to any of it, please use those as your takeaways. And really in life, you get what you pay for. And if you want to invest in something speculative, that really might be the time to get yourself involved with a broker who does evaluate those. Spend some more money on commission than you might on your discount brokerage account, but you're getting the advice. You know, there's just no way that you can know everything in every sector. You know, as well, the opportunity with a lot of brokerage firms or brokers that are out there investing in that space, they typically will also have access to private placements, you know, or prospectus raising capital raises, which will provide you with that opportunity. So I really do hope that people use that as a proper takeaway. You know, the one thing I wanted to get into is I think new investors, millennials, and kind of general understanding of the mining space has shifted since perhaps the 80s and 90s. I think there might be some misconceptions about the mining sector. Do you want to jump into that a little bit?
Yeah, that's a good topic to discuss, because I think there's a lot of kind of stereotypes in the mining space that are really completely misunderstood. Like, mining is outdated and not needed. Not true. Mining is harming the environment. Mining companies just care about themselves. Those are all completely misunderstood. And I relate that back really to an educational disconnect. One of the big global themes right now is sustainability and a big shift to reducing our carbon footprint around the world. I'm going to borrow a great quote that Catherine McLeod-Seltzer said, and she pointed out a low carbon economy is a high metal economy. So you need to think about that for a little second, but really what she's saying is to achieve sustainability and benefit the environment, we're going to need a lot more metals, whether it's copper, lithium, silver, precious and base metals across the spectrum. Everything that these environmentalists and greenies want to achieve is really requiring a lot more metals. And most millennials aren't aware where everything comes from, and that's used on a daily basis. It's often said, you know this very well in our industry, it's everything in the world is either farmed or mined. And they say that because it's true. Even with this current pandemic, I was doing some research before this interview. Mining is used in all sorts of healthcare initiatives. Ventilators right now, which are the life-saving devices right now for people, they require rechargeable lithium-ion batteries. Without lithium, those ventilators would not work. Copper is so important in hospitals. It has those amazing antimicrobial properties, and it's widely used on surfaces, railings, handles in hospitals to fight the spreading of germs. And a little interesting kind of fact as well is silver is used in hospital fabrics to prevent cross-infection and reduce bacterial contamination. So these are things that the average person wouldn't be aware about, but they're used in our everyday life. And really the uses and purposes of mining in everyday life are endless. And I always like to tell people that commodities specifically are the foundation of our modern civilization. And if you can understand that, you can understand how important the mining business is.
Well, and I think born with a silver spoon in your mouth, I think that actually comes from the fact that the families that could afford actual silverware, bacteria can't grow on silverware. And so it was a sign of health and prosperity, right? It really comes from that. So, and I think that, I think there's also kind of one thing that people might not be as aware of, and I don't know if you can touch on this or not, is the reclamation that mines have to.
Yeah. That's another big topic right now. Of course, in mining is ESG, which stands for environmental, social, and governance responsibilities mining companies have. Most people think about mining companies, they move into a foreign country, set up shop, make a big hole in the ground, and take off with the goods. But it's not like that at all. Mining does leave a long-lasting impact communities can benefit from, and people forget mining companies do build roads, infrastructure, hospitals, schools. They bring in healthcare, doctors and nurses to the region, and that changes the way these communities and individuals will live beyond the life of the mine and after the mine has shut down, once the mining company has left. And not to forget the employment opportunities that are also brought during the mining operation. And if skilled labor doesn't exist in those communities, the larger companies do have initiatives where they will train community members to be equipped with those necessary skills. So from kind of my vantage point, there's a lot of misconceptions and old stereotypes that are kind of still floating around the mining space that aren't really necessarily true at all. And I think it's going to take time to really overcome that. And that's something I'm trying to tackle myself with my social media channels, educating the next generation of investors, because at the end of the day, there are a lot of positive benefits mining companies do bring to the table.
Absolutely. Absolutely. And so where would you, if you were wanting to look at investing in the space and you want to know some of this information, is there any online resources that you will typically look to that somebody could go and check out if they want to start their own due diligence?
Yeah, there's a lot of great websites out there. One of the websites I check probably multiple times a day is kitco.com. They have live commodity prices there, and they have a lot of great information. Just watching the general news like Bloomberg, subscribing to podcasts like the Resource Insider, also Sprott. You know, they're a professional money manager. Rick Rule often gets online, and he's really a wizard when it comes to these topics. That's someone, if you're not familiar, you know, in this space, he's someone you should definitely be listening to. Other websites, if you want to do some kind of deep macro research on gold, you can go to theworldgoldcouncil.com. They have a gold hub dedicated to kind of macro fundamentals, and it's all free. You can sign up. Are there any websites that you use, Anna?
Oh, wow. You've put me on the spot. You know what? I probably am a little bit all over the map. And the reason I say that is because we focus on so many sectors for the exchange. As far as the resource side, I typically will end up following a lot of the letter writers. That's typically, and usually I end up down, you know, the rabbit hole, you know, on the World Wide Web. So I start following one, it kind of will get me to poke into another, whether it's a commodity or another letter writer, and kind of follow the stream down that way. So no, I don't have anyone in particular I'm following in the mining space. But I think there's definitely a lot of places that people can start doing that due diligence. I do sit on the committee for the Marketing and Communication Committee for AMEBC, and their website, as well as Mining Canada, has some fantastic resources.
I will add one comment there. So if investors do have, say, a brokerage account at a Haywood or a Canaccord or PI, they all create equity research. They have equity analysts that are specialists in the space, and they cover specific companies, but sometimes they do macro research pieces on gold or silver or copper. And that's some of the best research that you can read. Also, like the big 5 or 6 banks here in Canada, TD, CIBC, BMO, RBC, they all have equity analysts in the mining space that are specialists. And if you have an online discount brokerage or a full service brokerage, you should have access to those equity research reports. And that's something I often read and would encourage viewers to read as well, to educate themselves.
That is a really good point, and that's another value add. Typically, you don't get that research unless you know, you have a broker at that firm. So again, that goes back to you get what you pay for, and it provides you with that opportunity. Listen, I feel like I could talk to you forever, Andrew. You know, you're so great. You brought up Jamie Keach, and he was part of our new Faces of Mining as well. I would love to revisit this conversation before we, you know, again, as we go through kind of the next year and see how things play out. But before we close off, maybe you can tell us some of your personal opinions. Where do you think maybe gold and silver are heading? What's
Sure, yeah. Well, we saw today that, you know, gold was around $17.25 US an ounce, and last I checked, silver was around $15.20 US an ounce. But one of the big reports that made headlines this week was that the Bank of America was calling for $3,000 an ounce US in 18 months. So this is encouraging to see one of the US's largest financial institutions so bullish on gold. And one of the best things that this brings is awareness to generalist investors. Because simply when the mainstream media is talking about gold, that's what's really going to educate the general population and bring awareness to general investors. When programs like Bloomberg, CNBC, BNN Bloomberg here in Canada are talking about gold and gold stocks, people's ears perk up when they start hearing that and seeing it on, you know, the main headlines and main news channels. Another thing I'd like to point out that's highly constructive for gold, that's a little more financial though, is the negative real interest rates. So when negative real interest rates both in the US and Canada, inflation from the Bank of Canada and the Federal Reserve was pegged at around 2% for 2020. The Bank of Canada and the Federal Reserve both lowered interest rates to 0.25% to support the Canadian economy, and the US Federal Reserve did the same back in March, along with printing trillions of dollars to support the economy, businesses, individuals, and such. So what this means is, since gold is non-interest bearing, it's better than having a negative yield, which is very constructive for the gold price. And in the past month, from the March lows, we've seen gold up about 18%, silver up 25%, the GDX plus 65%, and many gold stocks, select equity names, are up over 100% versus the stock market recovering about 22% in the past month. So gold bullion is acting as it should be, as a safe haven and a store of value. Investors are flocking to it right now because of the uncertainty, the volatility, and the general concern for what the future may hold. Everyone has heard how precious metals for gold and silver are sold out right now. In my opinion, the next step would be for investors moving into precious metal equities if they want exposure, which is what I think we're currently seeing and will continue to see in the near term. Just to add to that, many gold and silver miners, because of the coronavirus, are shut down, which is also adding, fuel to the fire for gold prices because of the constraint that's being put on supply. So I think with all of that being said, I think there's incredible upside in gold, silver, and precious metal stocks for investors right now.
Well, and I think too, this is all sectors, but in mining as well, they say in times like this that there is fantastic opportunity. There's companies that are being massively undervalued. Again, that very much is somewhere where you do need some kind of professional advice to understand if a company is undervalued. But there is some amazing opportunities out there right now, if you wanted to get into the space.
Absolutely. There's definitely a lot of opportunities. Back in March, if you had the bravery and courage, a lot of those investments have either doubled or tripled right now. So I'd highly recommend, some viewers, if they're interested, reaching out to, mining brokers at Haywood Securities or Mackey Research, Canaccord, PI Financial here in Vancouver, or, subscribing to a premium newsletter like Exploration Insights or Resource Insider. Or if you want to go the free route and be cheap, you can sign up for GNA Financial Advisors on YouTube or Instagram and Twitter, where we're active on a daily basis.
I'll sign up. Listen, I think the one thing too is what you guys provide from the issuer side. Are you guys, during this, are you guys open for business? Are you taking on new clients? I think this is definitely some value added that a lot of our issuers in this time will really need. Can people contact you? Are you guys?
Absolutely, yeah. If they'd like to reach me, they can reach me at andrew@GNAFinancialadvisors.com. I'll even put my cell phone out there, 604-828-7027. That might be a mistake. We'll see.
Wow, that was bold. That was bold, Andrew.
I'm continuing to work with my core group of clients. We've had some new business come in on the social media front, which is encouraging to see, but still have capacity for new clients and welcome any new opportunities.
Oh, that's awesome. Andrew, it was such a pleasure to chat with you. We obviously spent some time on the phone getting to know each other a little bit better before this. We both have such a big passion for this sector, and I hope that you're willing to come back and have another chat maybe in the upcoming weeks as we watch this to continue to unfold.
Thank you so much for having me, Anna. I think it's great work that the CSE is doing this, utilizing social media, interviewing kind of the thought leaders and executives in the space. And I'm very fortunate to be a part of this discussion. And thank you so much for having me. And I look forward to our future discussions.
Thank you so much. It was a pleasure. Andrew, take care.
My pleasure. Thank you.